Hello, everybody. Welcome back to another 21st Century Renaissance and another open interest newsletter breakdown on GameStop. I'm your host, Dr. Michael LoPiano. Wonderful to see you all once again. I hope you enjoy this unexpected market closing, this unusual market closing yesterday. We had an interesting trading day on Wednesday, though not in terms of price action. There were some interesting dynamics to our trading day, actually, despite the fact that we had completely uninteresting price action. So there are a number of peculiar things about this week, not just with the market closure, not just with some of the price action we saw earlier in this week. So I'm going to talk through some of these unusual, let's say, infelicities in some of the things that I've been seeing, and maybe what this data combined can tell us or hope to project for us heading into this last options expiry before OPEX, before January OPEX. So for those of you who are new, if you're joining us for the first time, I publish analytics, technical analysis, and options data analysis over on my X page in an attempt to forecast daily price movements and weekly price movements in GameStop. I post this every day pre-market on my X page. If you're watching this on YouTube, you can find this link down in the description. If you're watching this on X, you can find that pinned at the top of my page. So let's get into it today. I decided to title today's analytical article, short volatility trap in place. So short volatility trap, what does this mean? Let's think about this for a moment. Let me zoom in here a bit. Yeah, now I'm doing this. I'm doing the zoom in so we can get bigger words so it's easier to see me here. Let's put me in the corner. I know you never put baby in a corner, but let's put me there for now. Yeah, so short volatility, right? So when we see price action, right, when we see something like the IV dynamics we've seen recently, so implied volatility, right, we'll see volatility go up and down. We talked about this a bit. Last video on Wednesday, right? When we see IV reach lows, because options contracts are affected by the implied volatility, right? They have an extrinsic value component that very often is affected along a number of different axes by the implied volatility, the expected potential daily move in the price of the underlying that options contract maps to. So when IV values are low, very oftentimes traders will go in and bet long on that implied volatility, expecting that volatility over time will increase, that the potential for a larger move will increase in the near future, and therefore the extrinsic value of those contracts will appreciate disproportionately to their purchase price as a result of that volatility increase. And sometimes that can, on GameStop, that generally occurs, right? Volatility increases tend to coincide with upward price movement as well. So very often buying something like a long call, although this is not advice for you to do so, buying something like a long call during an implied volatility low can mitigate some of the risk factors and the disadvantages that typically face a long call, which normally is structured in the favor of the writing party, the dealing party. Okay, when IV becomes very high, right, when brokerages, when dealers increase the pricing of their contracts based on implied volatility, when they're saying, wow, a very large move is anticipated, when that move comes to realization and the implied volatility is particularly high, right? Let's say we're moving up to the top of a range, of a price range within our technicals, and yet IV is very high at the same time. On something like GameStop, right, that sends a signal to the options market of, well, technically we don't have a big underlying move coming up. So the bet then is to create some sort of structured trade that then allows the trader to profit off of a decrease in implied volatility. So in GameStop, very often that takes the form of short calls. GameStop, because of this high IV to upward price movement correspondence, because calls on GameStop are particularly liquid, whereas puts are not, right? That's not the case necessarily on something like SPY. Right? Calls are what are primarily traded on GameStop as a result, partially as a result of that dynamic. So when we have IV levels that are elevated, that elevate at some point when, let's say, a correspondingly large upward movement in the stock price is not anticipated, what traders will do is short that volatility, and they'll do that by writing calls, which dealers, well, they would act as dealers in a certain sense, but let's say the designated market maker for GameStop, so in this case, Wolverine Trading, would have to accept those types of trades. However, it is possible that when traders overexpose themselves, right, when they pile short calls, when they think, oh, this thing definitely not going up, we're definitely going to go flat, something like that, right? We're definitely going to be advantaged, right? They can kind of pile up calls. They can overexpose themselves to quick price adjustments in the underlying, in such a case that it can squeeze them out of their calls. This is a gamma ramp can be built in, right? We've seen some of these call gamma exposure positions that when they become clustered together, very oftentimes a dynamic that can play into that is those who are short volatility, all of a sudden there's a huge spike in volatility concentrated around a set series of calls, and those traders who earlier in the week entered into these short call positions can find themselves very quickly underwater, and then so rush to exit those positions, providing liquidity for whoever was the long party earlier in those who entered into those same trades earlier to then exit at a profit, right? So what may be in place here, right? The reason I'm talking about this is we have some intriguing in the sense of, let's say, befuddling sort of incongruences in some of our data that are kind of difficult for me to make heads or tails of, or to offer some of the more conventional or more clear forecasting I've been able to do in the past. We did get an interesting tweet, right, from Ryan Cohen today, something perhaps I'll have some time to speak about in a later video. Very interesting to see him commenting here on this conversation between Pierre Poilievre and Jordan Peterson, two particularly high-profile Canadians currently. Ryan Cohen, of course, being a high-profile Canadian himself. Interesting to see this particular dynamic. I think there is perhaps a connection. I mean, Poilievre, it sounds, is someone who is perhaps interested in bringing about this kind of Doge situation to bureaucracy and economic policy in Canada, which has not been very good over the past decade, economic and fiscal policy. So interesting, right, to see Ryan Cohen interested down that pathway. And of course, Dr. Jordan Peterson has been someone who's been particularly supportive of that type of reform administration. He's written quite a bit about the psychology of that type of structure, what goes into, let's say, overdeveloped bureaucratic structures, and right, excessive control, things like that. And yeah, interesting to see them. Like I said, won't go into too much depth there, but interesting to see Ryan Cohen. Ryan Cohen doesn't come out with too many tweets too often, so interesting to see him comment on this here. But let's take a look at at some of our data here. Of course, heading into this particular unexpected market closure on Thursday, we had an impressively flat day, a curiously flat day. Did not really see much movement at all, right? I had mentioned there was this potential that there was a significant amount of call gamma exposure in place, that if we got another Chicago exchange type order like we did on Monday, on Tuesday, that it could run us up to the top of our channel, to the top of our macro bull channel, up slightly actually above $35, that was in place. But it did in fact require that type of bullish catalyst, that type of buying pressure in the background, whether it be buying to fail to deliver settlement requirements, covering a large short position, maybe one of these Thanksgiving short positions, something like that. But we didn't really get anything like that. And so what we saw instead here was trading within this very tight window between 32 and 33 placed us at this kind of gamma pin. So market maker gamma hedging between these two very large strikes, as well with some gamma accumulation at 32.50, largely kept us trading pretty tightly, it looks, intraday. And this kind of wedge form between that, this would be the 200-minute moving average, which we used as a resistance point on the day. Generally, not super closely later in the day, but early we did, and that kind of overlaid with the VWAP resistance line, so 2 standard deviations above our volume-weighted average price on the day. And then we used the midline of this bullish, now pretty bullish, sub-regression channel, this channel in blue that I've had here on our technicals for a while, which overlaid with the VWAP support line that is 2 standard deviations below our volume-weighted average price. Had some day trading in here, but otherwise pretty calm, nothing huge, not really seeing too much in the way of shorting. It didn't look right. Throughout the day, our shares available to borrow per international brokers did not change at all. So we didn't really get any type of shorting there. XRT on Wednesday was still on reg show. So because of that decreased liquidity, I'm not surprised that we didn't see any of that type of aggressive shorting. What was really interesting, and I pointed this out here in the article, I zoomed in a bit. Well, I pointed this out for today. I guess it's up here. Is actually how strangely elevated our IV remained, despite the fact that we had our lowest volume day since the 3rd of December. December 3rd. Our lowest volume day since the 3rd of December. So we had just over 6.3 million shares trading on Wednesday. That's the lowest since 6 million were traded on December 3rd. But yet IV levels remained elevated, right? Slightly below 120% per Schwab levels. We also had this weird kind of uptick into the close up above 120%, right? So we were actually around like 117, 118 throughout the day. And then we shot up to 120% and then dipped down toward the end of the day into 115. And I noticed all throughout the day, this had a very interesting effect on out of the money calls, especially going into next week. So going into January OPEX, we had things curiously, right? We had the $40 calls just for the whole day stayed above $1. So with however many days, understanding that we had this market closure coming on Thursday, we had all of these, $40 calls, man, I don't know, 6-7 days to expiry, right? $8 out of the money, $7 out of the money, with, an anticipated potential move there of something like, $8 in order to be profitable by expiry in 6 days, 6 trading days. That's impressive, right? That is strange in and of itself. So IV levels stayed high despite the fact that we did not have any particular volatility there. So I wonder if, continuing to build off of my comments as far as the restricted synthetic liquidity with respect to GameStop being restricted because of XRT on reg show, if that was sort of a reflection of that or of something else potentially coming. Anyway, that was the case. Then as well, pre-market today, right, and kind of starting overnight, this kind of the very late Thursday overnight session, Schwab showing IV levels going to 135%. Have no idea what's going on there. In our pre-market trading, that's the other thing too. Over the day yesterday, we had our shares available to borrow essentially cut in half versus their levels on Wednesday. There were many of the hundreds and hundreds of thousands of shares were used for settlement purposes yesterday. and many of them just didn't come back into the pool, right? So we were at 1.6 million. We went down to 800,000 yesterday during market closure, and have only come back to 1.1 million right now pre-market. So intriguing there. We had this bit of shorting show up. 125,000 shares got dumped during the extended hours period prior to. So this is the exto period, kind of still this overnight exto period. This period when only recently have you been able to trade GameStop during this 24-hour period here, certainly by Schwab. So prior to maybe like a week ago, I hadn't seen this type of, there's definitely weirder stuff happening in these earlier hours than we've seen in recent weeks. So 125,000 shares prior to even the normal extended hours period is curious. I mean, it popped back up, not the whole way, but definitely into almost the open here, back into the sort of 32, just below kind of 32.50 area. So we'll have to see what that open looks like. But yeah, and then no data, almost market open right now. No data on XRT. No reg show threshold data at all. Should be on New York Stock Exchange. We have nothing here. So we have no idea whether XRT is still on reg show. That's also weird. Don't have any of that data. Don't have any threshold data. And then on our broader time scale here, right, heading into today, some other kind of weirdness is this one share that popped up, right? Okay, so this popped up in the exto period, in the overnight exto period after 8 p.m. This was a trade executed at 8 p.m. on Tuesday. That at the time, right, this upper resistance line on our macro bull channel, so 2.68 deviations above the mean of our 4-hour candle closing price since October 28. Right, it was overlying overlaying exactly 35.69, which is where it touched. However, right, normally if we saw that intraday, if we did see that value pop up intraday, that would have sent an RSI overbought signal. But instead, we get this candle of this one share almost touching this line that looks like, oh, that's a fulfilled periodization, even though what we did was only kind of get up here and then start to retrace. For it to actually like match and send a very clear signal, it would have needed to have done something like this that happened intraday. But this is just one share, apparently. Very strange. So it didn't send an RSI signal, and yet here we are reversing. So these are out of sorts with each other. We have this that says, okay, if I'm just going off of this, I'm saying, okay, yeah, this should kind of continue down, and then we should bottom out probably, today, close around 31.50. Like in this pocket is probably where we look to end up, a kind of a bearish day, complete this periodization, maybe go sideways, maybe bearish day Monday, fill this out. But, at the same time, we haven't been kind of abiding by our RSI trend in this range, with the exception of our sort of trade down here for Thanksgiving, the 2 weeks prior to earnings. Right, we didn't get up there. So it's sort of strange. If I were to look at this from an RSI perspective, I would say, well, maybe we hung out around this midline now that we've dipped below RSI neutral again, but then we're going straight back up here is what I would think RSI wise. But technical wise, this does say, okay, maybe we just kind of flatten out a little bit and then try again, maybe next week into OPEX, or who knows, right? So this is a weird dynamic for me. This has me a bit puzzled. Hard to get a kind of line or a clear direction there. On that, it's made this whole technical formation difficult, I would say, at least for me to read. But we'll have to see how it develops. Right, we still don't know about. XRT. As far as our weekly patterns go, we are looking to still close 7 weeks above our 200-week moving average. So, part of me, when I look at this, my initial instinct in thinking about these factors and thinking about this broader context, I mean, on the broader scale, we're still looking bullish in terms of our technicals. We didn't really hit an overbought level within our trend there. So that would suggest that we still have some potential room to move up, or we wouldn't necessarily need to hang out down around these lower levels for as long a period of time as would otherwise be necessary. We have XRT potentially still on reg show, potentially not. We have no data. Don't know what's going on there. If XRT comes off reg show, then we get that synthetic liquidity back, and then shorting the stock is less risky. But if we don't have that data and XRT is still on reg show, is this possibly something of a trap for potential shorts to enter here, to continue to maybe draw in some short call traders, just like we had a huge volume, a very large volume. That was our leading trade on Wednesday, was short calls. Is this something of a setup for a trap for short call traders, for people who are short volatility right now, maybe also short the stock, right? So we see that in our OI data. I won't hash this out too much. We did see this also going into next week. So these points here where we have an extension of call OI at 34, 35, 37 and a half, interestingly, and 40, these were primarily short call trades. 40 was, 37 and a half was almost entirely short call trades toward the end of the day on Wednesday. So hard to get a sense there, right? At the same time, though, we do have max pain creeping up this week. It's at $31. That's the highest we've seen since 2022. That's really high, right? We couldn't even get a reading of $30 for max pain basically all of last year until our very, very last expiry of the year. We were at 30.50 as of yesterday. So or as of Wednesday. So now we're up to 31 with some of those in the money calls coming off the board, with some more puts coming on the board, out of the money puts coming on the board. So we're up toward 31. That certainly bodes well for a higher close, at least in the ballpark of where we currently are. Those puts have evened out our put to call GEX ratio a little bit. So it's a little bit higher, which means a little bit less determinantly bullish. But then interestingly, right, as we go and we take a look at our call gamma setup right now, we have a very high accumulation of call gamma call gamma exposure at 33. So that's really increased quite a bit. We have a lot of call gamma at that level. If we kind of open or move down into the lower part of this range here, we could see something like what we saw last Friday, like we saw for some of these Fridays back in September, on August 30th, September 6th, September 20th. So this would be something like an attempt to run this gamma ramp to sort of play on the gamma hedging properties, right, of a quick move. So if some bullish volume comes in while the price is kind of hanging out here around 32, it can, right, really quickly kind of rocket the price up. Gamma values, right, the rate of change of delta is huge. Gamma hedging shoots the price up. Shorts, people who are short volatility, right, so people who are holding short calls, which are close to the money here, will run for the exit doors. You'll have a lot of buying volume in here, and then we have enough of sort of like a catch. We have enough call gamma in the 33.50, 34, 34.50 area, and this whole 35, right? It can be kind of caught in this range. How far up it goes depends on how much actual volume we have, but it can get kind of slingshotted up into here, and then kind of gradually sort of dip back down, and then kind of close above this position. If we get something like that, if we get like something we saw from the Chicago exchange earlier in the week, we could definitely see that. If we have just another flat, primarily options day, we're probably hanging out in the lower 32s for most of the day, and then maybe late we kind of slip underneath here into this more neutral territory. At the same time, if XRT is off reg show, we could get a ton of short volume kind of dumped on this 32 position. It's not as strong as it's been in the past. and that might move us towards some trading in this more dealer neutral area. So dealers are gamma neutral between 30 and 32. They're not really doing a lot of hedging at all. So that's going to be more profound in terms of the amount of capital that's invested in the options market, how easy it's going to be for the options market to push us around within that level. So a lot of options here. I have these scenarios outlined in the document, right? Because this looks, right, I'm not getting any kind of strong signals about how we're going to look. There's a lot of question marks. We have missing data here. Our technicals, right? We have these weird blips in the technicals. This disagreement between RSI and that weird heavy share, very high priced single share order that somehow shows up in the graph there. It's a bit strange. So don't really know what we're looking at heading into January OPEX. Don't know what to expect coming out of this day here. But I am, I think our price action it will conform, right, based on our volume, based on the flow of external activity, right? If we get one type or another of external activity, it's going to conform to these types of ranges, to this type of activity, right? If that's what plays out. So I have this kind of narrowed down for myself to 3 scenarios to try to like think about, okay, this is we're, 2 roads diverged in a wood and die. I took the one less traveled by, something like that, Robert Frost. But to kind of have these in mind helps me sort of think about, okay, like depending on how we start, depending on where we go, like where might this have us end up? We'll know, right? We'll know during tonight's live stream. So yeah, we could get a gamma ramp. We could get, I don't know, a Roaring Kitty tweet maybe after Make Canada Great Again. Roaring Kitty comes up with like, I don't know, a picture of a thumb or something. I don't know. And then, it explodes, something like that. But definitely keeping in mind this potential for a short volatility squeeze, keeping that in mind, right? Before I run and go, open some short volatility contracts, something like that. I'm kind of, these question marks have me pretty apprehensive on the trading day. So yeah, maybe keep that in mind as you go and take a look at whatever it is you're going to be looking at in the market today. So as always, not financial advice, not trading advice, and education and entertainment purposes only. But yeah, I definitely believe in taking an informed approach, data-based approach to whatever's going on in the market there. So today, yeah, looking forward to seeing you guys for today's live stream. We're going to talk about some of these dynamics in greater detail, pertinent to thinking about what's going on with XRT, what's going on with volatility, what that volatility has to do with our price action, has had to do with our price action this week, what it might mean for us going into next week, what historically, right? So what was important about, say, XRT on Reg Show, about volatility, about, in particular, the confluence of these factors during the 2020 to 2021 sneeze, and maybe how that compares to what we're looking at right now and what we might have to expect heading into the rest of January. So hope you guys can join us today at 4 p.m. Eastern time at market close for today's live stream. Looking forward to having some time for questions too, talking to you guys, and yeah, thinking through some of this stuff as we head into January OPEX. It's going to be a doozy. So yeah, thank you very much once again for watching and listening. Look forward to seeing you guys tonight at 4 p.m. Eastern time. Thanks very much. Take care.